If I had $1 for every time someone's told me they feel judged by their accountant or their bookkeeper, can't answer their questions, like I would not be here today. You need someone in your corner that you're comfortable coming to and asking what you might think are the dumb questions or the questions. Like everybody should know this.
Welcome to the Process to Profit podcast, where we find out about the key processes and productivity techniques that drive successful service-based businesses. Whether you're just starting out or looking to scale, join us as we uncover practical strategies to streamline your operations and help you make more money by boosting your productivity. Let's get started. My guest today is Carla Titus. Carla is a finance expert with over 15 years of combined experience in corporate financial planning, analysis, strategy, and online business experience. She provides fractional CFO services and financial consulting to business owners looking to grow their business profitably. Her mission with Wealth and Worth Within is to empower business owners to achieve financial clarity and peace of mind so that they can get back to doing what they enjoy. Carla, thank you so much for being here today. I'm so excited to talk to you.
Thanks for having me. So excited to have this conversation. Everything critical in a business needs processes. So I'm just excited to highlight how those should be for the financial side of the business.
And I think you're my first financial expert, so you can give us all the goodies and the important tidbits for us to learn today. So let's start by you kind of telling, I read your bio, obviously, badly, but why don't we start by you telling us a little bit more about who you are, who you help, what kind of services you offer, all of those good things.
Yeah, so I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within. We've been in business for about 6 years doing fractional CFO services, and some people might not know what that is, but there's financial consulting and advisory work. Everything from projecting your, revenue, your profit, understanding how you get paid, how do you pay your people, every component of business profitability, and we help people manage that in their growing businesses. We also offer professional bookkeeping services. As you know, there's just different, bookkeeping services out there. And if you're looking for the next level support or have outgrown your existing support, then, that's what we are able to provide support on getting your books ready for tax time and making sure that they're done the right way. So we're very passionate about working with growing businesses that are established. They've been in business for a few years. They're looking around. They're like, this growth is just a little overwhelming, or things got a little more complex and we don't really have the right financial processes in place to help support where we're going. We want to understand a little bit more of what's coming ahead and how do we think about properly planning in a proactive way, not waiting for it to happen to you in business from a financial aspect. And as you know, everything touches money. So even if people are like, well, I don't want to talk about money, or like, I'm scared of it. At some point, this becomes an important aspect that you want to tackle, and you don't want to be surprised by it. So we want you to be empowered with a clear financial plan, the right processes to support you at every stage of growth as you continue to work through expanding your services or creating new revenue streams, or even just managing your cost sometimes to make sure you have profit in the first place. We want to be that partner, that business partner that's along the way that helps you answer some of those questions through data and financial analysis.
Great. Well, that sounds like a lot. And I'm happy that there are people that specialize in numbers because it is not my forte. I am not ask my family. I am not a math person. It is not my specialty. I majored in theater for a reason.
We love creative people because we can help them bridge that gap in knowledge. Sometimes they're like, I'm not a numbers person. I'm like, well, we can help you develop processes to help you understand your numbers better.
Yeah. And it's funny. I actually majored in lighting design for theater, which does have some math in it. So it was not the best choice for me. And notice I don't do it for a living now. So it's interesting what we major in versus what we end up actually doing in life. I know you work with more established businesses, but how can people kind of just starting out handle their numbers, their finances sort of in a responsible way so that when their businesses do grow, they're prepared for it. They're, sort of starting off on the right foot. How can they start their businesses off in the right direction with the right structure, the right process? What does that look like?
Yeah, that's a great question. And I think not enough people are asking that, because what happens is we get a lot of those established businesses with the wrong financial habits, and then we have to break them, which is way harder than if you just started the right way in the first place. So what we encourage new businesses to do is start by making sure your books are in order. Like step one, make sure your numbers make sense, that you're actually doing the work every month to ensure that you understand what is happening in your business from a financial perspective. And this is process one, right? We want to install a good discipline around doing monthly bookkeeping, at least looking at your numbers every month and understanding, did we make a profit or not? If we didn't, why not? Start to dig into that. And if we did make a profit, can we do more of it? What are the things that are working that we can double down on? And that's where the numbers and the data is going to start to give you the answer. So you don't have to go guessing what to do next. You just do more of what is actually working, which is shocking. But a lot of people don't take the time to go back and look. And this is where they're just trying everything. They're throwing spaghetti at the wall and they're like, why isn't it working? But then there they have the 2 or 3 things that actually been performing well, but they wouldn't know because they're not measuring that by forgetting to look at their numbers. So step one, do your books and look at your numbers. And then from there, start to use that data to make those decisions because now you have information about what's working and you can do more of that, invest in it or double down. And that's where good financial habits and systems in place are really going to get you further. And this will grow with you over time, right? When you're 2, 3 years in business or along the way, having this habit in place already is going to help you better manage your finances in the business and not be surprised by the overspending or like we didn't make our revenue goal because we didn't even know what that was. And setting those right expectations up front.
Yeah, I will fully admit that I do not always have the best financial habits in terms of tracking and managing. And I went through a period where I was working with an accountant, but they weren't really the right fit for me, and they were really expensive. So I wasn't keeping up with the bookkeeping, and they were supposed to be doing it, but they weren't really doing it great. So I have now found a new bookkeeper, and she's much better at it. But, there was a period of time where nobody was looking at the books because I didn't know what I was doing. I would go in and my original accountant would be like, no, you're not doing this right. Let me just do it and I'll just categorize it. And so I just got scared and just stopped looking at it, which I'm sure was the very mature, responsible response to that situation. But now I have a great bookkeeper. She's catching everything up for me. But how do you recommend people go about finding, at what point do they need outside help? And then how should they go about finding that outside help? How do you really find someone that you mesh with, that works well with you? What's that process look like?
Yeah. Oh my goodness. If I had $1 for every time someone's told me they feel judged by their accountant or their bookkeeper, can't answer their questions, like I would not be here today. But my thought is that you need someone in your corner that you're comfortable coming to and asking what you might think are the dumb questions or the questions. Like everybody should know this. And like, why should everyone know this if you didn't go to school for it or you didn't learn it on your own, right? We are here to close that gap. I think that the accounting and bookkeeping industry just hasn't done a good job at being customer service or friendly. We love educating and helping our clients understand why we do the things we do and how to go about it and explain to them but if they care to know the behind the scenes, how things work and why. But you need to find that person that makes you feel comfortable, that you can bring anything to them and they're excited to show you or teach you what you need to know because, again, they know that you didn't know. And they're here to educate and empower you with knowledge so you can have better conversations going forward. And then they become that trusted partner. Now, to find that person, it is a harder endeavor because you have to filter through some bad support sometimes in order to get to the good support. But you can kind of spot it because even in the way that they do maybe a sales call or consultation or the way that they're asking you questions, how are they making you feel even just from the first interaction? You can tell a lot about a company or a brand or the people that work in that support service in the way that they just speak to you in the first conversation. So go get on different sales calls, when you're looking for your new bookkeeper, ask them some accounting questions, even some basic things like, do you know what a chart of account is? Do you know how to manage a balance sheet and make sure that it's clean? I think things that from an accounting perspective, bookkeepers should know. And you can filter a lot of them out at that point because they won't be able to answer those questions, right? Even if you don't know the answer, you'll be like, oh, they're stumbling. Okay, maybe they're not the best person for me. And someone also has the ability or capacity to grow with you because I find that a lot of business owners just stay with their first bookkeeper because it's who they know. Maybe they make them feel comfortable, but then at some point, maybe they've outgrown the skill set or expertise of that person and they need to look for the next level bookkeeping support. And it's hard because they're like, I trust this person and I want them to stay on, but maybe they're not supporting me in the way that I need. And that's where they need to be looking for additional services or to replace that current, support that they found.
Yeah, I find we have a lot, and me included, have a lot of emotions and mindsets tangled up in money, and it's scary to let someone into that perhaps dirty laundry pile of finances that you have, and then it's even scarier to be like, all right, you've been working together for a while, but now I need something else. Like it's scary to put yourself out there with those finances. So how does someone who has been in business for a few years, because I think this is your sweet spot, someone who's been in business for a few years, they have a bookkeeper, maybe they have an accountant, because I know they're not the same thing. I know I use them interchangeably, but they're not the same thing. How does someone who's, like I said, been in business for a few years, they have some profit going, they have the services that they've already been using, how do they realize, like, okay, now it's time to move on, I need something bigger, or maybe I need a fractional CFO? How does someone come to that realization?
Yeah. So the common situations we see happening with clients that are ready for more support, it starts with just asking your bookkeeper to maybe do a budget or do projections for you. And the bookkeeper's like, "What? I don't do that. I just do your books. Like, I just want to close them. I don't want to talk to anyone, maybe preferably, and I just want to do my job, deliver it to you, be happy, right? Everybody's happy. I get paid. We move on. Maybe you're
Right.
asking your bookkeeper, your accountant, like, can I afford to hire? You're starting to grow, you need more support, and you're not sure if those financial commitments you're ready for yet because you haven't planned them out, with someone that can help you understand what's happening there and can you afford it. Maybe you're asking questions like, I'm making all this profit, but I don't see that cash in the bank. What's happening? And someone needs to sit down and explain to you why that is the case and what are some of the components that maybe are missing in your financial processes, like collecting on your outstanding invoices. Maybe you don't have a process for that, and we need to establish one. Making sure that, those deposits are making it to your bank account, not just staying in your PayPal account or,
Hmm.
things that people
Hopefully
don't
you're not
think
using
about.
PayPal, honestly.
And hopefully you're not using PayPal, but that's or Venmo, right? All those
Yep.
things that maybe are not the right processes in the business and that will not serve you longer term and come to evaluate some of that for you. But I find that often is asking the questions that lead to more support and you're not getting the answers you need. They're money related questions. They're like, should I be an S Corp? Should I change my tax entity? And even your accountant's nowhere to be found. Right. And so, like, sometimes that happens, and you're like, I just need someone who can maybe answer my emails or my calls. And
Right.
you know that that is not your current team, unfortunately, and they're not, willing to step in. And maybe, again, they don't have the skills or expertise to step into that role and they don't feel comfortable. That's when they should be saying, hey, maybe it's time for you to go find a CFO that complements what I'm doing. I could stay your bookkeeping team. You work
Hmm.
with a CFO, we all work to support you. And that is a good time to maybe access those type of services, which go above and beyond what a bookkeeping or tax person will just do for your business, which is really focused on current and past, not forward looking.
Yeah. It's funny with this same accountant, they recommended that I switch to an S corp because at the time I was contracting, so I was making a lot of money through
Mm,
contracting. And but I was working directly with the bookkeeper. I wasn't really talking to the accountant, and so I wasn't super clear on a lot of the changes.
mm,
And then this year, I stopped doing so much contracting, so I stopped making so much money. And now the S corp is like it's a big mess because I can't keep up with the payroll that I was doing and all
yeah.
the taxes and everything that's involved. And like I wish that we had sat down to talk about like what happens if my income drops and I can't keep doing the same thing, but I only ever talked to the bookkeeper and I never talked to the actual accountant. And then they didn't bill, this is terrible. They didn't bill me all year. Like they never sent me an invoice, they never sent me anything. And then suddenly I get a bill at the end of the year for $8,000 for all their
Oh
services.
my
And
goodness.
I was like, we didn't talk about this at all. I had emailed you in March and asked you what it would cost to do these things. You never got back to me. And now suddenly you're sending me a bill in November for $8,000. And I was just flabbergasted. And so, yes, I've had terrible experiences, accountants and bookkeepers. So, and it's funny because before I started working with the bookkeeper, my accountant kept referring to him as her IT guy. My IT guy does this. And then suddenly he was my contact. And I was like, is he an IT guy or is he a bookkeeper? Like, why is he handling
Yeah.
everything for me? It was
That's
just the whole thing
confusing.
was very bizarre. It was awful. But I think if I had had someone who was like more of a CFO, I could have sat down and said, here's what my business looks like now. I don't think it's going to continue to be this lucrative. Like, what should I really do? I know the S Corp is saving me money on taxes now, but what is it going to look like if my income drops? If I'd been able to have those conversations with someone and not been brushed off by my accountant and my tax person, then I might have been in a lot better financial situation at the
Mhm.
beginning of the year than what I ended up happening and having the $8,000 bill, and I owed it back to other taxes, and it was a whole thing. And
Yeah,
so
I
then I
think
also had to pay my new accountant to untangle it all. Like, she had to
yes.
go to the IRS and find out everything, that because I had two different EINs and I had a social security number, and so it's just so frustrating to me that people are in business and offering these services, but maybe they're not the right people for it. And so having someone like you in the CFO role, I think, could have saved me a lot of heartache in this whole situation.
Yeah, and we do work with clients on like a one-off basis because we find that sometimes they're just not ready to make an ongoing investment. They don't need it. We want to meet them where they're at on support. But I think what happens is this is also confusing and there's so many rules and they don't apply blanket statement to everyone. So you need to really assess your situation and make sure that this works for you, not only now, but also longer term. So when we made that change, we were prepared from a cash flow perspective. Like we knew we were going to have additional costs. We knew we had to run payroll. We knew there was all this inherent costs that come with even filing another form, by the way, which your accountant maybe told you and didn't tell you that there was more costs with them and their services. That's why probably they want you
Yep.
to switch to it. But also, ideally, the tax savings should net off to a positive savings for you overall. And we go through that calculation with my own accountant and said, well, net of your fees, net of the payroll, net of this other cost, am I saving money, actually saving money or not? Versus, okay, now you set this bar of you need to perform at this level or better. Otherwise, S Corp doesn't make sense for you longer term. And 1 year of savings doesn't make up for 3, 5 years of it not yielding any savings for you and creating more headaches. So it's not a short-term decision. And like businesses should know that. And they should be asking the questions. Okay, that works for this year, but what about next year if I make half as much? What if the next year after that I'm back to growing double? Like, how does that work? Can I get out of it? What does it look like for
Can
this
I
long
pause
term?
it for a year?
IRS, please pause my S Corp election because it,
Yes.
it didn't work for me. And that is
Spoiler alert, you
nothing
can't do that.
you cannot. That's the problem. And I did actually go through those questions with my accountant. I said, well, what if in 2 years from now, it's not the right thing for me? Can I get out of it? What does it look like? Is there penalties? Like, again, but that was because I knew what to ask, right? And so you need to find your professionals that are helping you educate you in that and help you navigate some of those big decisions so that you don't get caught off guard, that you make the right long-term decision, not just the short term, and also understand the implications from a cash perspective, from a budgeting perspective of what that's going to look like. And then ultimately, is it actually saving you money or is it just creating more headache and unnecessary work that makes your accountant happy maybe, but not you as an owner because it's not really saving you any money or effort.
Yeah, especially with a surprise bill of $8,000 at the end of the year. So, what strategies do you recommend for business owners to start, who maybe have been avoiding their finances a little bit, to start managing and understanding their cash flow? How can they approach that if they're
Yeah.
maybe a little timid about it?
Yeah. So the scary part is real. Like we'll say a lot of the work we do is around mindset of like, let me just walk you through your numbers. Maybe this feels really daunting to even open your profit and loss statement. And you're like, I've never looked at it. It has so many lines. Someone please help. This is just overwhelming because there's too many numbers and I don't even know where to look at. So we always say, start by first giving yourself grace. I think a lot of it is like, we put so much attachment to where we're at in business and where our businesses are successful to our worth and value as a person. So first we have to start by this is an entity the business performs at X level. We will love it to be better over time. But how would you even know if it's doing better if you don't start where you're at? What if you just thought about good or bad, terrible or not, negative or not? If you just thought of it as a starting point and then you get to decide what progress you want to make. And so what we encourage people is say, okay, we're not going to judge ourselves for the results we have today. We want to make sure we're making progress. So maybe it's negative $10,000 this year. We don't like it. We want to make progress towards a break even or positive scenario. What does that look like? So we start to make a plan and we start to take the action to help drive the business in that direction. But how would you even know if you didn't know what your start point was? So we want to see the progress. We want to have a plan to map out that actions we need to take to make it more successful and, over time fix these issues, which could be a pricing issue. It could be you need more sales. Maybe you got too much cost going on and you need to, change some of that to make sure there's room for profit after you pay yourself and after you pay your taxes, which is key.
Mm-hmm.
And then start to make that, like, monitor that progress. Are we making progress? Are we worse off than we were last month? Are we better off than we were last month? And you start to see that progress happen and you start to create that action plan that helps drive that result you want to see. But you got to stay consistent. You got to take the right actions and you got to look at the numbers in order to know, are we making progress, yes or no? And then with the progress, honestly, when things start to turn around, it becomes exciting and fun because you're like, oh my God, I'm actually making a profit. I'm making money. I can pay myself. This is fantastic. I saved for taxes before they came due. And then it brings that joy back into your business from a financial perspective, because I know the numbers can be boring, but they can be very exciting if they're actually working really well for you. You're making money.
Yes, making money is always exciting.
And
So it's
that's the
nice to have
goal
the
of
numbers to
business.
back it up. Right. I mean, you want to help people. That's what we all say, but we're all in it to make money. Let's be real, because otherwise we'd be doing it for free. So
I mean,
what
you can't have impact if
tools?
you don't make money to be able to make that impact,
Right.
right?
Unless you're like already independently wealthy, and then what, then like I said, doing it for free. So what, you don't even have to think about money at that. So we talked a little bit about strategies. What tools can you recommend for business owners to start making informed financial decisions? Is it okay to start with just a spreadsheet, or should they really have more of a robust tool to start with? Is QuickBooks really the only option? What can we look at for that?
Oh, don't we love to hate QuickBooks? But
Oh
at the end
God,
of the day, it's the industry standard tool, unfortunately, or
I
fortunately,
know.
however you want to say it. Listen, we're not married to it. We don't get paid to say this. We just know that that's where businesses can grow with it, right? At the end of the day, they're meant to be the standard tool. Like I have some clients that use Zero also. It's not bad. That's another good alternative. I shy away from the free ones just because you're not going to get the robust reporting and support that you maybe are, needing in your business, especially as you start to grow. But it's okay to start with a spreadsheet. If you know what you're doing and you know where your transactions are and how to categorize them, a spreadsheet can do the job. Like I had a spreadsheet for the first 2 years of my business because I didn't need anything fancy. And my accountant was happy because I knew how to categorize things. So they were like, oh, here's my profit and loss. Got it. You did a great job, right? So making sure that you know what you're doing, first of all, right? You have the right chart of accounts, you have the right categories. Think revenue, cost of goods or cost of services to deliver, the services or products that you have. And then operating expenses, anything that's overhead, rent, utilities, internet, anything like that. And then your profit line, right? Those are your big categories. And within that, there'll be subcategories like maybe marketing and advertisement. There'll be some other subscriptions and software maybe that you're using. And that's nested under those categories. So just knowing what a typical chart of accounts for your type of business model is going to be a good starting point to make sure you frame your spreadsheet in that way. And then transitioning eventually to a software like QuickBooks or Xero or any of those that automatically fits in transactions so that you can have it all in one place. Also, the beauty is that you have 3 statements for financial reporting: your balance sheet, your income statement, your statement of cash flow, which if you're going to go to a bank to get a loan one day, you want to apply for credit, you want to do any of those things, they're going to ask for those statements. So just making sure that you're able to produce them easily and not having to, start from scratch. We help a lot of clients transition from spreadsheets to QuickBooks setup because we just can automate a lot of that and then do the work of reconciling and categorizing things in the right way and produce those statements for them with ease so that they're not wasting all this time and effort. Also, their accountant's not mad at them because they categorize a marketing transaction as something else. And they're like, you're not getting the full tax credit on certain things. And the ways that you categorize things for minimizing your tax liability is an important aspect of bookkeeping that I think a lot of time gets overlooked. And if you don't have the knowledge, either go educate yourself or go find someone to outsource it to, because guess what? If you're growing a business, your time is better spent growing the business and doing the marketing and driving the growth than it is doing the accounting and bookkeeping that you're probably not great at anyways. You're going to have to pay someone to clean it up and come redo it
Yep.
for you anyways. So like you might as well just outsource it early and have them grow with you over time.
And that's exactly what happened to me. I did it for myself and then had to pay someone to come back and clean it up. So, yeah, I would have probably been better off just having someone do it from the beginning. We talk a lot about separating your personal and
Hmm.
business accounts. And
Yes.
as someone who has maybe not been great at that in the past, can you talk a little bit about why it's so
Hmm.
important and then what kind of some best practices are? Say for someone who's just starting their business, doesn't have any cash flow, so they're supporting their business with their own money.
Hmm.
How does that work when you're trying to separate your accounts?
Yeah, great question. So, one, we always are a big believer of not using your business as an ATM machine. Your business is not meant for that, not to cover your personal expenses, but you should get paid from your business. So that's where we put someone on a budget and say, how much can your business afford to pay you? When you're just getting started, you're probably feeding money into your business, not the other way around. And so you want to categorize those deposits in from personal funds, funding the business as owner's equity in the balance sheet. And so what I find often is people are just marking it maybe as revenue or income because they're like, well, it's money in, right? It doesn't matter. It does matter because it shows that you have a stake in the company by having brought in your own personal funds into funding the company in the first place and making sure that that gets categorized in the right statement to adequately portray what portion have you invested. Because over time, ideally, we're paying you that back as an owner in addition to your own pay. So we want to make sure we track that amount in owner's equity, and then it just stays there, right? And then if you keep feeding the money into the business, at first you're just going to keep increasing that owner's equity, whatever amount that you put in. At some point, your business is going to be self-sustaining, meaning it will make enough revenue to
Hopefully.
cover your expenses. You're break
That's the
even now.
goal.
We're making
Yep.
progress. Again, progress, right? Over not
Hmm.
making money. And so you're not dipping into those cash reserves that you have built through your personal funding of the business. And this is where having that business bank account is so critical at the start because you don't want to be using your personal bank account to say, oh, that's business money, or your business account to pull personal expenses out of it because you want to continue to keep that separate. One, from a record keeping perspective, but also from a liability risk perspective of someone maybe, comes after your business and all of a sudden they are able to access into your personal life finances and you don't want any of that. So you want to keep the two separate. And what you want to do is once your business starts to make money and you have cash there, you're able to transfer from the business to your personal bank account as little money or as much money as you can afford to do in the business. And then it's a clear transaction that the business is paying you as an owner. Now, I want you to think of your business as an entity. I know you own it. I know you run it. You're probably doing all the work. I know it's you. But the business itself is thought of as an entity on its own. Now, you happen to work for it. You happen to own it. And that business will pay you hopefully a salary one day or just a monthly amount that you're able to afford. So don't think of the business money as your own either, because now you have to, pay taxes on it. All the money is the business money. It's not your money until you move it to your personal bank account. And so then it becomes really clear that you have this entity that runs and operates. It has its own money. It's full of cash that you use every month to cover your expenses as you're making revenue. Money comes into the business account, not your personal. The business account gets those deposits so that it's clear that this was generated by the business. It might be, again, you working, doing all the things, but it's the business that's receiving the funds, not your personal. Because the beauty of a business is we get taxed differently than from personal income. And that's why they behave differently. That's why we have to track them differently and separately. And we want to create clean records for how the business is performing. And sometimes there's advantages. The first year you might not make money. You get to, take advantage of that. And then the second year, maybe you made some profit and you're paying taxes on that profit only. You don't want to be paying taxes on anything more or less than you need to. So clean financials are going to be key. And also we talked about decision making, right? Having clean financials
Hmm.
for decision making is super key when you're making progress in business as you're growing.
Yeah, all great advice, and I should be better at following it, but all great advice. Piercing, they call it, my other accountant called it piercing the veil
Corporate veil.
between the
Mm-hmm.
corporate veil. That's what it was. And I
Yeah.
was like, well, sometimes you gotta pierce that corporate veil if the money's not coming in for you. So, but no, now I know a better way to do it is to actually transfer the money in, mark it as owner equity.
Mm-hmm.
Now I understand that better. So great. So I'm just, for business owners that are just sort of getting started or maybe who haven't done it before, what's the best sort of advice you can give for starting a budget in their business? How can they really plan out their financials, have a better understanding of it? What's some tips and tricks you can give for those people who are just starting out or maybe who have been in business for a while and never had a budget before? I
Yeah.
have a budget, so
So
that one's not one that I have done
like,
personally.
check that one we have. Yeah. So a budget is going to be evolving over time, right? It's not a static. And that's the thing where business owners get caught up. They're like, well, I did this budget and it didn't work. So I'm just not going to do it ever again. I'm going to throw it away. Budgets move because they change, because things change and you got to be able to adjust. So what I always say is like, start with a baseline budget. And what I mean is go look at your last 6 months of expenses. What do you spend on that subscription? What do you spend on that internet bill? What do you spend on XYZ things that you need for your business? Now, that is a starting point. So you'll say, okay, I spend this much in, rent or utilities or internet and software. But guess what? I'm about to purchase another piece of software. So I want to make sure that I add that into the budget. And maybe you did a yearly membership instead of monthly. So now you have this blip in your budget that is yearly. And you know that every April you're going to get charged $1,000. So guess what? It should be no surprise that next April you will get charged that again. So you start to map it out, right? You're like, oh, those come due then. If I do it monthly, then it's more consistent. So I know what it is ongoing. So you get to make those decisions to save money or not. And then you start to map out all the costs that you already have. If you're new to business, you might not know what those are. So you need to just make your best guess of, I'm going to need a laptop. Maybe I need some software. Maybe
A
I need
website,
a
probably.
website.
Yeah.
And, you'll start to just kind of list some of the things and then go find out how much those things cost so that you can start creating a budget for your business. And then as revenue starts to come in, or even before it does, you start to set goals for your revenue too. That's part of your budget. I'm going to have 5 clients paying me X per month. I'm going to have 5 projects paying me X per project. You start to map out how money is coming into your business and those become your goals. So if you haven't started or you're already going and you're like, well, in the last 6 months, I did 6 projects. Well, can I do that again? And then you map it out and you make it a goal and you say, I'm going to go find those 6 clients and do this again at this price point that I know is working well. And you start to map out those revenue, those costs, and then you see what's left. Is there a profit left? Are you break even? Are you negative? And then you're starting to ask different questions. You're like, oh, I'm negative. That means I'm going to fund my business every month with my personal money. What can I do to change that? I can make more money, more clients, more revenue, more, grow. Or I can maybe cut back on some expenses, maybe delay, pause, cancel, and at a later time resume some of those costs as I start to grow. So you start to right size your budget, meaning you are going to only pay for the things you can afford at this time. And that one is the hard one because I think a lot of business owners are told, just invest in all the things and your business will just automatically grow and you'll make all the money back. Not
Wouldn't
every
that be
investment
nice?
is ROI positive. I wish. I'm like, oh, if I had every investment pay off, different situation. But understanding like, are you profitable or not? What is your plan to get profitable? That's where the budget is going to help you. And every month your budget might not be the same, but roughly it probably doesn't change a lot. So you can kind of use that as a starting point. And you should be evaluating every 3 to 6 months. Has my budget changed? Has my cost increased? Because now I'm growing. Now I need an assistant. Now I need a production team to do all my social media video editing, whatever. So you start to kind of add those costs in because they're coming. And you made decisions to invest in a program or some mastermind. You want to add that cost in too and know that, can my revenue support that? But if I grow my revenue by 10%, maybe this is a no-brainer. Again, you start to set those goals. So then it's a benchmark and you start to see your progress against it.
Yeah, and I think seeing all the numbers laid out can be really eye-opening too, of like, oh, I didn't realize I was subscribed to all these different things. Like I talk to a lot of business owners who are like, I'm subscribed to this all-in-one tool and I just don't know, I've never used it before and it's costing me $250 a month, but I don't know how to use it. And I'm like, why are
Yeah.
you still paying for it? If you're not using it, you don't know how to use it, you haven't put any time into it, why are you still paying for it? And some people just forget, which I'm like, how do you forget $250 a month? So I think having it all laid out, and I find that going back through like my bank statements and my credit card statements is a really good way to kind of double check, like, oh, did I forget to add any subscriptions? Did I add a new one? Like, I gotta make sure that I include it in the budget. So I think going through it can be really eye-opening for business owners to see, oh, this is where all my money's going. I totally didn't even realize I was spending all of that money. So yeah, definitely. And I do it all in a spreadsheet. I have QuickBooks, but I still do my actual budgeting in a spreadsheet. It can be super simple. My budget spreadsheet is not super simple, but it can be super simple to just kind of like, here are my costs, here's my income, here's my budget. it can be really easy to set that up.
Yeah, don't overcomplicate it. Sometimes the problem is that we make it so hard. And then we're like, we never want to touch it again because this takes us 5 hours to update. You're like,
Yes.
never, right? Like 5 minutes, please. Anyone out there, like just make it simple. But yeah, we don't even like forget. Sometimes we just like make the investment hoping we'll have the time to do it. And then we
Mhm.
don't. And guess what? You get to choose to cancel that and rejoin later. Like it's always an option. It might be a different price,
Yep.
whatever. It doesn't matter because if you're not using it, you're just wasting money anyways and time because you don't have it. And so I always say to business owners, and we do this for all of our clients, right? Every 6 months, we're reassessing, is this still the right investment for the business? Do we still need this thing? We paid for it 3 months ago. Are we even using it? Or is it a duplicate of the other thing that we supposedly canceled but didn't and we're still getting charged for? Like making sure that you're going through that, and reviewing and making sure, is this still supporting the direction that we have set for the business goals that we're trying to achieve? And if not, then let go of it. Find a new one. Do a different
Yeah.
time, rejoin. It's fine.
Yeah. And people will be like, well, the doors are going to close. And it's like, yeah, they're probably going to reopen again. It'll be okay. They open them at least once a year usually for these programs, or you could find a different one. Like
Exactly.
if it's not the right time for you, then it doesn't matter if you could do it again later or not. Like it doesn't, if it's not the right fit. So,
Mm-hmm.
well, any other sort of last pieces of wisdom you would like to impart on our listeners, either the beginners or people who are a little bit more experienced? What other financial wisdom can you leave us with?
Yeah. So I think the numbers can be very powerful if you allow them to be your friend and you are actually looking at them and making decisions from a data perspective is going to be an important aspect of managing your business going forward. Everything touches money, whether you like it or not, whether you're afraid of it or not. You will see that every decision you make is probably some sort of time commitment or money commitment that you're making. So shying away from your numbers and putting your head in the sand will not fix that. So making sure that you're taking the time, put it on your calendar, you know, maybe review your numbers once a month for just 15 minutes. Like that's maybe all it takes for now to just get you to have the information that you need to make good financial decisions that are data driven, not just your gut and instinct, which is good. Like that serves us well. But when you pair with data, it can be so much more powerful because now you know what's actually happening versus what you think is actually happening. So go validate that with your numbers.
Yeah. Even if it might be scary, and sometimes we want to stick our head in the sand and pretend like it's not happening.
Yeah, or have
Well,
someone come hold your hand like your bestie, in business. Be like, just we'll do
yes.
this together so that we're not afraid alone.
Right. Don't go alone. Take one of these. Isn't that what the online meme? Anyway. Thank you so much, Carla, for being with us today. I really appreciated it, and I appreciate your candor around money and how you want to make money, and numbers much more accessible for people and less intimidating. So again, thank you so much for being here. If people want to reach out to you, what's the best way for them to get in touch?
Yeah, if they're ready to hire a bookkeeper or a fractional CFO, you're welcome to book a call on our website, wealthworthwithin.com. We also have a free newsletter. We put a lot of educational content out for free. We love to just get people to not be afraid of their numbers because they know enough and they feel confident in it. And if nothing else, feel free to follow us on social media at Wealth Worth Within. We're on Instagram, Facebook, and LinkedIn. We're very active. So feel free to, tell us what kind of content you want to see and how we can help support your business money journey so that you feel more empowered and in control of your finances.
Great. Again, thank you so much for being here.
Thanks for having me.
All right. Bye, everyone. See you next time.